the second quarter, we see gold move above 2100 convincingly, then I think it moves fairly rapidly, and fairly rapidly in my world is 6-9 months, but it moves fairly rapidly to 2250, 2300,
right?
Which to me is staggering. Now, if we see gold firmly above 2100, and similar for silver, if we see gold firmly above 2100, we're going to see the XAU stocks move up 20-30%.
Gold prices experienced a slight uptick on Thursday during the first half of the European session, maintaining positive momentum while staying below the crucial $2,040 to $2,042 resistance zone. The climb in gold prices on Thursday was attributed to a weaker dollar, with market focus on an upcoming U.S. inflation report expected to provide insights into the Federal Reserve's policy direction for the year. Adrian Day, the founder of Adrian Day Asset Management, shared insights into the current trends and future outlook for gold, silver, and other precious metals. Day anticipates gold reaching an impressive level between $2,250 and $2,300. The upcoming U.S. consumer inflation data, scheduled for release on Thursday, is highly anticipated. Economists polled by Reuters foresee year-on-year inflation at 3.2% in December, with core inflation expected to dip to 3.8%, marking its lowest point since mid-2021. A New York Federal Reserve report suggests that consumers anticipate a decline in inflation. Additionally, Fed Governor Michelle Bowman recently commented that the U.S. central bank's monetary policy appears sufficiently restrictive. Day's prediction aligns with the idea that gold could surge when the Federal Reserve signals a pause and pivot before fully addressing inflation concerns. The U.S. Federal Reserve is expected to maintain interest rates at the end of its meeting on January 31st. Market indicators, such as the CME FedWatch tool, indicate a mere 5% probability of an interest rate cut in January. Day emphasizes the evolving market sentiment, noting that initial optimism was high, with more than 88% of participants anticipating rate cuts by March. However, the current expectation has decreased to around 66%, aligning with most Federal Reserve members calling for rate cuts in March. Before you watch Adrian Day's interview, subscribe to our channel and give this video a big thumbs up.
As you know, Ivan, for the last sort of 18 months, and really even before that, I've been a little more cautious than some of my colleagues. And when the Fed started tightening, my message was that gold would take off. You remember there was a lot of concern, why aren't gold and silver moving more?
Right.
With inflation moving up. And I always said gold will really take off, gold and silver will really take off when the Fed signals that it's pausing and pivoting before inflation has been conquered. Mm-hmm. And we are exactly in that position now. Jerome Powell and the Fed generally in their statement and their dot plot, and in Jerome Powell in his press conference 2-3 weeks ago, whatever, mid-December, they could not have been clearer. But we are not going to see more rate hikes, and that we are going to see rate cuts this year. I personally was sort of a little bit taken aback, but Powell didn't at least sort of push back a little bit on the extreme optimism, but he didn't, and that's very telling in my mind. So to me, just to summarize, what I was waiting for is the Fed pivoting before they've conquered inflation, mm-hmm. and it's very clear that we're going to see rate cuts this year, and it's also very clear to me that inflation has not been conquered. After Powell spoke, the Fed funds futures was showing over 88% of participants were expecting one or more rate cuts by March, and I thought that was a little bit optimistic. Yeah. But now it's at 66%, 2/3, and given that the Fed members themselves in their dot plot, a majority are calling for rate cuts in March. I don't think that's overly optimistic at all. Gold and silver really tend to move on any kind of sustained basis on monetary factors, much less than geopolitical factors.
Yeah, that's true.
Look back on the last 50 years, 9/11 or all sorts of
events,
the Gulf War. The reaction in the gold market tends to be short-lived. A lot of it is already built into the price. I mean, 9/11 was a shock and came out of nowhere. I mean, analysts can say it didn't come out of nowhere. There was this, that, and the other, but the market was not expecting it.
Yeah, absolutely.
People were not expecting it. The war in the first Iraq war, it's a little bit different. We were expecting something. And the second Iraq war, we were expecting something. So typically, and with Ukraine, there was all this chatter. And I'm not saying that I definitely thought Russia would invade Ukraine. I didn't. But certainly there was heightened tension with the troops on the border. So it wasn't a complete out of the blue shock.
Right.
And so typically these geopolitical things, you get tension building up before the event. And so it's already discounted to some extent in the price. So I think monetary factors are much more important.
Adrian Day's outlook foresees a notable impact on gold-related stocks, with a potential increase of 20 to 30% anticipated if gold maintains a robust position above the $2,100 threshold. However, recent market developments reveal a contrasting scenario as gold miners hit fresh lows in 2024, signaling additional breakdowns in the sector. As represented by the GDX ETF, senior miners experienced a noteworthy move, closing below a rising short-term support line, thus confirming a new bearish trend. Furthermore, junior miners had previously undergone a short-term breakdown, and the latest observations indicate their movement toward the lower boundary of their rising trend channel. Day's expectations extend to silver, predicting similar movements for the precious metal as long as gold remains robust. Despite this forecast, the silver markets demonstrated minimal activity during the early hours of Wednesday, leaving investors seeking clarity. The market's proximity to the lower and upper ends of the overall range suggests a potential opportunity for patient investors, though the current lack of clear direction requires careful observation. Let's get back to the interview.
I always hate sort of forecasting particular prices, especially as, was it P.T. Barnum or someone said, if you're going to forecast a price, don't forecast a time. But
yeah, that's true.
To me, gold is the standard. So it's more a question of how low is the dollar going to go rather than how high is gold going to go. I mean, my gosh, I think when we see the breakout, which may come as early as I think it'll come as early as the second quarter. I think we're being a little optimistic if we're looking for something next week. But by the second quarter, we see gold move above 2,100 convincingly. It moves fairly rapidly, and fairly rapidly in my world is 6-9 months, but it moves fairly rapidly to 2,250, 2,300,
right?
Which to me is staggering. Now, if we see gold firmly above 2,100, and similar for silver, if we see gold firmly above 2,100, we're going to see the XAU stocks move up, 20-30% easily, and the developers and juniors, selectively, will move up much more than that.
Wow. You were talking about
silver, if I may, silver and silver stocks will catch up in that environment. And I'm sure all your people listening know, if you look at the last year, gold has well outperformed the gold stocks. And the gold stocks and silver are more or less equal, but silver has well outperformed the silver stocks.
Right.
And the junior silver stocks are even, the lowest of the pile. If you look since, let's say, the beginning of November, when things turned, then you see a bit of a different picture. You see, let me just make sure I'm getting this right.
This is in 2023 of November?
I'm talking just 2 months ago.
Okay.
So for the last year, gold has outperformed the gold stocks and outperformed silver. But if you just look in the last 2 months since gold bottomed, the junior silver miners are the top performer. The silver miners are the second. The gold stocks are the third.
So the gold stocks have huge potential.
That's the pattern you expect to see. Gold, I'm using here gold generically for the whole monetary metal complex.
Right.
All assets. When gold starts to move, you expect the gold stocks to outperform and you expect silver to outperform. And that's exactly what we've seen. Silver hasn't, but the silver stocks have in the last 2 months. And I think we will see that in the period ahead.
The end of 2023 and the start of 2024 present an environment broadly supportive of gold prices. Interest rates are expected to be cut back aggressively, so the US dollar and Treasury bond yields have been in broad decline. How might the anticipated gold price movement and the potential impact on related stocks align with or differ from Adrian Day's insights in recent market developments? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. We aim to reach 5,000 subscribers as soon as possible, and your support could make a big difference. Thank you for being a part of our community.